Welcome to one more thought share from Bravisa Temple Tree. In this video, we will talk about index-based investing and an index that is doing pretty well in the current markets. A sector that has been talked around the world for its damaging performance in the late 2021 and up to mid 2022. Most of the big stocks in this sector went through a crash, even falling above 50% from their peak. Today, this sector has bottomed out and has started giving fairly good returns. We are talking about the IT sector and the NSE IT index. Let's look at how the buying opportunity came in this index and what to expect in this index in the coming few days. Before going into talking about the details of the index, IT index, let's talk a little about index based investing. Today there is a lot of talk about passive index based investing. This has come because of various reasons. One that we think would be the cause would be that today most of the individual stock selections are not able to give better returns than the index. Most of the fund managers and investors are struggling to beat the index returns. Why is this? One of the reasons that we think would be a cause is that there are more number of companies that are listed in the exchanges today. About 15 years back, we used to have 1000 plus companies listed in NSE, and out of that 800 stocks would be active, if I can remember it well, because of the data we had been processing for a very long time. Among that 800 stocks, one can have a 50 to 60 stock portfolio of good performing companies, and obviously they will be having huge alpha creation against the index. While today we have more than 2000 plus companies listed and are active today in the market. In this universe of 2000 plus stocks, today we require at least a minimum of 100 to 150 stocks as a portfolio to have a decent outperformance against the index, which invariably is impossible for any smaller fund to manage. Our individual portfolios is impossible to have such huge stock selection. This could be one of the reason why index is doing better than active fund manager portfolios. Through indexing, the whole market gets grouped into smaller sectors, categories and subsegments. That will help us to have a handful of indices to analyze, like how we had a handful of stocks, thereby covering the broad market with the same effort of analyzing fewer group of stocks as indices. Another advantage is to know the strength of the index, because every index will have a group of stocks in it, and if we analyze those stocks to find out which are the stocks that can go up from wherever we are looking at, and those stocks that are going to go down, likely to go down in the same index, it will give us an idea, okay, this index has more stocks that are likely to go up, so we can hold on to this index for a longer period. At the same time, if suppose it shows many stocks are getting weak and there is a likelihood most of the stocks are likely to go down, we can sell the index. So this way it helps us to buy and sell the index at appropriate times, which can help us have an advantage of better returns than the index itself. That's one of the ways we can maximize investment returns through index based investing. Just like that passive investing into index and stay quiet also will do, you will be having whatever the index returns, that returns will be there. By using this analysis of finding out strengths and weakness, which is little easy, this advantage is not available with stocks. We can't find out, we can have fundamental research, indicator analysis and all to find out if a stock is weak or strong. That also has probabilities. Even this one what I am talking also has probabilities, while here we can have a little better outcome than the probability that is there in stocks. Similar, whatever is the analysis that we do in stocks also we do it here, because it's collective group of stocks, it can give us a better understanding. So that helps us to have little higher returns than the index itself. So with lesser effort, more returns than the market. That's the advantage if we are using tactical decisions through index investing. So today in this video we will talk about the NSE IT index, how it gave its current buying opportunity, which came about a month back, and it's already done about 4,000 points rally from the bottom wherever it got signaled. From the bottom it's around 5,000 plus points. So for an index that is around 28, when it was at bottom it was on 26,200, today it's around 31,500. With these values, if we see this 5,000 points is somewhere around 15% run. So how this buy opportunity came and what we can expect from this index in the coming days. So when can we sell it, or is it going to have big gains? Let's look at it through the graphs, data and charts. Let's go through some of the fundamental numbers for the stocks in the index, and along with the charts and graphs to identify how a buying opportunity can show up in an index. Starting with sales and profit for the stocks in the index. All the stocks sales and profit put together, how is it showing up? This is the TTM. TTM is trailing 12 months. That is, in a financial year we have 4 quarters. April, May, June is first quarter, July, August, September second quarter, October, November, December third, and Jan, Feb, March is fourth. So when we are using annualized data, it always ends in March. That's the financial year end. Suppose we are doing analysis in December, obviously annual data will be 9 months old. So to have a recent data, what is a better way of using is a trailing 12 month. That is, if the recent available data is December, that is the case in this video as we are talking now, we are having the December 22 numbers. So from December 12 months prior, what are the quarters that are available, group that to form the trailing 12 month numbers. So this is the trailing 12 month sales and profits. Here profit is above sales is because of the secondary indexing here. As the secondary index is having a lesser value, that's why it is showing up like this. Otherwise sales is higher, profit is lower. But with this graph, what we can identify is the speed of sales and profit. You can see the gap here. That gap was seriously higher in earlier periods, and as it gets coming to the right edge, we are seeing a tightness here. It's getting slowed down. Now in December quarter, after December quarter results have been published, there is a pump up in both sales and profits. When we come to a little closer picture using the quarterly sales and profit numbers, it shows up very clearly. December 2021, that result came in January 22. That's where there was a big weakness in couple of companies. After that it has a big drop and jump is because few companies which came early in the results had bad numbers, and that took the index sales and profit itself down. And after that, subsequently, couple of companies which came out had given bigger numbers, and so it recovered. So this was the first damage. It actually played out beautifully in the market. December was the peak. December 2021 was the peak, and afterwards market index, that sector itself, whole sector turned down. So post December, March quarter was fairly good, but after that June came down. Sales was going up, profit was declining. It showed a profit has pressure. Margins have come down significantly. That was showing up here. And further to that, even September results were equally bad. Numbers were not so great, but there were some improvements. Some improvements came, and it also dropped further. But after that, December numbers was fantastic. Still Coforge and Persistent were the best among the 10 stocks in IT sector. Like 34% growth was there in Persistent, which both the stocks did extremely well, and now they are going through their own phase. So this run is one of the reasons why the index or the sector, IT sector, started doing well. Now we saw the sales and profits. Let's look at the earnings and their growth. Earnings is based on the capital. Whatever the profit made, if you divide by the capital, we get to the earnings per share, that is EPS. Okay, growth in earnings is at low speed. Earnings is actually going up. This EPS is going up, but the speed at which it is traveling is very slow. It's covered between 18 to 21% in the last 14 to 16 months time. That is, this is not the way the IT index performs. IT stocks are kind of defensive stocks which generally has between 10 to 15% growth always. Now that got slowed down, and that's why it shows up here. I just told about 15 to 17%. In December, January 2021-22, growth was at around 20%, 19% was the growth. Subsequently, it slided down, and it is in the right edge here in December. As of now, also it is at 10.35. It's double digit, just above double digit. So it's this. What it shows here is IT index, though it is going up, it is not great. It's not going to have big runs. It can start coming down further, because if this earnings growth is not improving, which will not help the index get momentum. As of now, EPS is at 20.93. That is for every rupee of capital in the IT index stocks, earnings profit made is 20 rupees 93 paisa. This is the PE and what we can expect using the PE. TTM PE EPS is 20.93. I just showed it in the previous graph. This is how the PE has traveled, and the peak that we had in December. September there was a peak. Subsequently, it was index went up big time in December, but PE did not expand. That gave a weakness. That shows profits are declining. So that's why it started showing pressure there, and after that it collapsed. So before going further, there is this numbers. It shows this 2090, 2030, 1300. Actually, PE we generally talk about 15, 16, 26. So that numbers are based on the face value of the stocks. Here we generally use the equity capital of the company with the profit. Whatever profit the companies make divided by the equity capital, that saves us from the deviations of face value. Like if we take 10 stocks in this IT index, each stock, some can be 1 rupee face value, some can be 2, some can be 5, some can be even 10. So when we have to come at a single number for all the index stocks, we have to have a divisor for all the face values to come to a same denomination to find out what is the PE. That's how that PE which is worked in the market is doing. Whereas to simplify the working process, we have been using this one only. That is, whatever is the profit, we just directly divide it by the capital to find out what is the rupee earnings. It's not earnings per share, it is rupee earnings, like dollar earnings they will say in US. Same way here we use rupee earnings. For every rupee of capital, what is the earnings and how the PE is based on the rupee of capital. For every rupee of capital, the peak of IT PE was 2092, and after that there was a drop. That drop came to a bottom in June 2022. That was a bottom. There it was 13,327. So about 700 plus 70 points drop, which is somewhere around 32% drop. Subsequently, in September there was one more bottom, but here we can see the bottom that came in June, July was not breached when subsequent bottom came in September. This was a very early sign that when index is going down, PE is not going down, is because there is some traction coming up in the earnings of the companies, which is improving the EPS. That's where there is some bullishness shown here. After this, the index turned up. Currently, as we are talking, the PE is 1475 compared to the bottom of 1327 and currently 1475. It is around 150 points, somewhere around 10 to 11 or 12% gain. But actually the index from its bottom has gone up 15%. That again, the deviation is because earnings have improved compared to what we had in June to September 2022 to December 2022. That improvement is what has pushed the index up. So using this, the peak and the true bottom here, which is the extremes of both total rally, recent rally that the market, that index had. Between 2092 to 1327, the average is 1710. So if the PE there is a high potential that if it comes up, it can come to this average level and then find a resistance. At average level, when it comes to 1710, where can the index be? It can be around 35,798. Will it go there? Currently it is around 31,500. Will it go to 35,798? Let's look at it. So this is the chart, weekly chart of NSE IT index. It clearly shows where the weakness got developed. December 21 is weakness, June 21 is the bottom, September 22 double bottom came, a new low here, but that developed the strength. October, November had a good rally. February 23 it's showing tiredness. So let's look at it here. Index went up, index price went up, but indicators were weak. Volume was not very high when it came to the top. We already talked about the fundamentals also, which also showed a weakness, and subsequently there was a big drop, and after that there was a fantastic correction. Price comes down, hits a bottom. Small divergences start showing up in volume itself in June, July, but after that a small rally, and that could not hold on. It comes down again, but second time when it comes down, it gives a new low. This is where PE did not give a low, new low. That showed PE was getting stronger compared to the price of the index. So again, along with that, we had a bullish divergence on the histogram and MACD. Volumes also drifted very low compared to what it was having in March, April, May, June. Huge volumes were there in March, April, May, June. Subsequently, it slided down. By September, it was very, very low when new low happened. Further to that, there was a turnaround and index went up, a small correction, then it's going up now. So buys and sells. In December 2021, after this weakness, it was not at all a good opinion to hold this index in an investment. It was right to exit, because there was huge weakness on all levels, fundamental, technical, indicators, everything showed weakness. So that was the exit. After that, it had a beautiful slide around 38,000 levels. This sell came, and the bottom comes at around 27,000. Double bottom happens at 26,100, 26,200. So even if we didn't be out till 26,200, if we had covered it somewhere here also on first weakness, that itself was around 29,000, close to 9,000 points. We did not participate. That's a huge advantage. This is the use of index based investing. We can move out and buy the index again when it goes down, so our investment remains same, but we are adding to gains by moving away when the weakness is there. Then further, when the second bottom happened, that was a new low, buy came here. This buy had one more qualification also, we will go to it in the next slide. After that, it went up. Currently price is around 31,500. As the price is going higher and higher, indicators are showing weakness. There is a non-trend here. When in non-trend, there is likelihood price can keep moving above and below the moving average, like what it is happening here. Up and down it will keep going. If that is going to be the case, looks like it will take another dip and then go up. Possibilities are there. As of now, with volumes are sufficiently higher when it is going up now, so there is no dearth of volume which can keep the index up, and there is a slight weakness already seen. That's a tiredness that is there in the index. So this is a graph which is proprietary. We have done this using, we call it pattern strength charts. This we have for almost all the major indices in India. What this does is it checks all the stocks in the index. In IT index, we have 10 stocks. Each and every stock, what is the pattern of that stock? Is it strong or weak? And that gets marked in this different colors. Dark green, that is bullish, weakness 1, weakness 2, weakness 3, and bullish sideways. On the bear side, bearish grouping is bearish sideways, bearish third stage weakness, second stage weakness, first stage weakness, strong bearish. When the index goes to third stage weakness, majority of the stocks are in third stage weakness on the long side. When it is up, that is the time to sell the index and buy it back when it is coming down. Using this graph, when the bears are pushed to the top, almost they are at 100, that is the time where we can sell the index. It's both are extremes. 0 to 100 is the top and bottom. Beyond this, the index cannot travel much. So when it goes and hits the top, this is like a oscillator. Hits the top, it has to reverse. Similarly, it's a bottom, it has to reverse and go up. So at the top, when bears are diminished, that's the time to sell the market, because bears are going to pound and take the control of the market. Similarly, when bulls are pushed to 0, almost 0, that's what we see here. that's the time to buy the market. When buying and selling, advantage will be if there is more weakness in the index. How to find the weakness? On the bull side, if blue is there, that is weakness. On the bear side, if orange is there, that is weakness. It has to get spread out. It should not be concentrated to either maroon or green. Maroon or green is strong bullish, maroon is strong bearish. So in December 2022, there was a small drop we saw in the charts. In December, market came down and then went up. At the time, blue was getting higher. We had around 30 to 40% blue, and weakness 1 is another 30 to 40%. This brought a very clear significance along with the charts and indicators. We also found out that this graph gives us information. Majority of the stocks in the index are also weak. It's right to take a sell position, and it was exit here. That was around 31,000 somewhere, around 31,000, and after that index gets to a drop, and by end December bulls are decimated, almost they are at the zero. But here can we buy? It's a good time to buy, but in small quantities, because bears are not still weak, they are going strong, and yellow is non-trend. This much non-trending is there. What will happen is index can go into a tight range, so we can take small exposure here and add up when another bottom comes. So that's what happened. There was a buy here, and afterwards for 1.5 months it held on in a range, then gave a new low. At that time when new low came, we started having a spread out. All the maroon pushed up to 0, it became red. This showed bears have moved to weakness 1, stage 1, and after that there are some stocks which have also come to weakness 2 and 3. So from here it can go down little also, but here it turned up. If suppose we are buying this kind of double bottoms, gives good to have some space, and index will turn around. That's what happened here. Turnaround happened and it started rallying. By the time it took about 4 to 5 weeks, by the time bulls came to the top. Now here it was a time to take some profits, because at the peak from here there is no much space to move around. Already strong bulls have retraced. It's all gone to weakness 1, because weakness 2 and 3 is not visible. So part profit can be taken here, and subsequently when the future rallies happen, blue comes up more and red already started showing up. When this weakness starts developing, we can exit the whole position. As of now, this buy came at around 28,500. Partial profit book happened in early February. Now some more upside is left. Let's look at the stocks in the group. 10 stocks in the index. HCL Technologies already moved to maroon, that's in strong bearish. Wipro and Persistence have come to weakness 3, it's got blue. Since they are not big stocks in the index, that's why we are not seeing blue showing up very little in the graph. This stocks, Infosys, TCS, LTIM, L&T Infotech and Coforge, are as of now tired. They can have some more rally. So this is where big market caps are there, and this is what shows up as weakness 1 in the PSE graph. Emphasis and Techem are at the peak. These are two and the strongest bullish zones now, but not big stocks. Techem is fairly okay market cap. Emphasis is a mid cap stock. Only stock that is likely to get strong is LTTS, L&T Technology Services. This is a small mid cap which cannot have big runs. So obviously major concentration is here in this tired zone. When this moves to weak, that's where index will turn down. So this will be tracked and reported in the PSE graph. When the graph, as the stocks move out from W1 to W2 or W3, this green will come down, light green and blue will start going up. It will show up as weakness, and that's where we can sell and book profit from this index. Like this, we have around 9 indices tracked on daily basis. For those indices which has ETFs traded in the NSE exchange, all the indices have this PSE graphs reported on daily basis, and about 24 sectoral indices are reported on weekly and monthly basis, including the major indices like Nifty, Next 50, Mid Cap 150, Small Cap 150, NSE 500, Momentum Index, Factor Index also, Momentum NSE 200, Momentum 30 is there. All of them are tracked on weekly basis. So this will help us to identify which sector to invest now when to exit, thereby help us maximize our returns through index based investing. Very less effort, more returns, better than the index. I will not say we will have best of returns. That is impossible, because we are, as a market, we are maturing, getting into bigger, more and more stocks in the market. So obviously above the average, if we are able to perform, that will be a significant outperformance being and working in the market. So using these PSC, this we call as PSC graphs, all of them are published in our discussion group. You can join our discussion group by clicking on the link in the description, and by subscription you can have access to all these graphs, which will have daily comments on what is the levels where there can be resistance, where we can look for a buying opportunity, where there is a partial exit possibilities available. Everything is being posted on a daily basis for all the ETFs, weekly basis for all the sectoral and broad market indices. If you would be interested, you can click on the link in the description to join the discussion group. Like this, we will try to publish whenever there are opportunities, either in the indices or stocks in the market. We are not giving any buy or sell recommendations. We are just giving our ideas. When we are doing our studies, we are just sharing that studies to help others also to use it for their benefit. But don't make your decisions on investing just keeping by with this information here. Use this as an input and do your studies, come to a conclusion. If it gives you a confidence, then go ahead and do your actions, either buying or selling. So because it is individual money that is being invested, don't take others' opinions and invest in the market. Do your studies, get to confidence, and then invest. That way a person who does that will know what is the mistake I am doing, and learning from the mistake over a period will help us make better returns in the market. Thank you.